We all know that the Fed has initiated its first rate cut not that long ago. Now the question then is, what is going to happen to the market? Is it going to go up or is it going to go down? Now based on history, out of the 7 instances whereby the Fed initiated its first rate cut, 5 of them have generated positive return after 1 year, whereas 2 instances have generated negative returns. So the negative returns is basically during the dot-com burst as well as the great financial crisis. The rest of the time, generally is quite positive, so unless we are seeing a significant drawdown in terms of the economy or hard landing as per what you would have normally been hearing, history does tend to support that moving forward the stock market is likely to generate positive return. Of course, it's not a slam dunk case. There is no guarantee that that is going to happen over the next 12 months. It really depends on one key factor, and that will be how the economy is going to perform. And today, if the economy is likely to avoid a recession, the median performance for the stock market is generally quite strong, whereas if the economy goes into a recession, the likelihood of a significant drawdown in terms of the market is also quite high. Now today we're to break down into a couple of factors, which are some of the factors that will be performing better after an interest rate cut. So this research by Bank of America basically shows that over the next 12 months, the various factors that perform quite well is that of growth. As can be seen over here, value versus growth, it is on a negative portion, means that growth has outperformed value over the next 12 months basis on average. And in terms of market cap size, small versus large, small caps have significantly outperformed that of their large cap counterparts. And last but not least, in terms of bonds and stocks, bonds have marginally outperformed that of stocks over the next 12 months. Now this is just a quick overview of what might happen to the stock market as well as some factors after interest rate cuts. There are a couple of other areas which I want to be talking about in this video as well, one of which is that of gold. So historically, after an interest rate cut, gold tends to also perform pretty well. So gold has already been one of the best performing asset class on a year-to-date basis, not very surprising considering all the geopolitical concerns that is surrounding us at this moment of time. But just based on Fed rate cut, it has shown that historically, once the Fed initiated its first cut, the overall performance of gold tends to be quite positive, as can be seen over here. Right, after the first rate cut, gold performance tends to be quite positive. So we are at this level whereby gold has already been steadily climbing up since the start of this year. But if the interest rate cuts starts to gain more traction, that is where gold would really be shining as a key asset class. And there's actually a lot of reasons why one should be owning gold at this current juncture. We'll leave that for another video session. Okay, the final area which I want to be talking about is that of which sectors, if we are looking at investing into the stock market, which sectors should we be looking out for? Now, based on this research done by Goldman Sachs, it does shows that the sector that has typically generated excess return after the first interest rate cut over the next 6 months is that of utilities. Okay, on a median basis, the S&P 500 tends to return roughly about 9% over the next 6 months. But the one that has really been significantly outperformed that is that of utilities. Right, an additional 5 percentage point excess, so roughly about 14% return over the next 6 months. That's what you can be expecting from the utility sector as a whole. And the utility sector, again, there's also various reasons why one should be looking into entering that. And of course, the major tailwind that has been boosting utility stocks since the start of 2024 is that of AI. Okay, so that's something which I have talked about multiple times. I've done up videos with regards to why you should be focusing on utilities. So this is still one particular sector which there could be an opportunity to be capitalizing on based on the fact that with interest rates likely on the down, utilities is one of those defensive names that, or defensive sector that you can actually be entering into to buffer against potential market volatility or uncertainty. Now, for those of you who have bought into the idea that maybe you should be taking a second look into utilities, the question then is which stocks to enter into. And that's where typically I would be using certain resources such as that of the Traders GPS platform to assist me in terms of making a decision. So today, if I were to come over to the Traders GPS platform, this is a easy platform for me to be finding stocks that is gaining or in the early stage of gaining momentum. Okay, so what I've done is basically I have filtered first according to the strength, monthly strength. And next, I want to just focus on the sectors. So I click onto this, double click, allows me to focus just on the utilities sector, those with the strongest strength on a monthly basis as well. And this is where I will do my initial screening. And as can be seen over here, the top counter based on strength in this utility sector is none other than Vistra Corp, VST ticker. And today, if you click into it, you can see that the price momentum has been relatively strong. And for this particular counter, there's actually a buy signal earlier on, a few days back, last week, whereby there's a presence of green arrow, there's a presence of the trend impulse factor, and the mode is bullish. That is where you have gotten into it. And if you have gotten into this counter, right now the upside would have been somewhere, wow, pretty decent, about 24% since then. Now the counter has just breached its, I would say, 52 weeks high. This is the 52 weeks high level, so the momentum is strong. Buying momentum might actually continue for this particular counter. So Vistra, definitely one of the strongest momentum counter right about now. Are there any other counters that you can be considering? For sure. The other one that I have talked about quite often is NRG Energy as well. It's a utilities independent power producer just like Vistra Corp. This is also showing good sign. So for this counter, the uptrend isn't as strong. Okay, the ramp up in terms of share price isn't as strong, but it is again one of those counters which is showing a very good setup. It is very near, or actually has just broken its 52 weeks high not that long ago. There's actually a positive signal over here in terms of the presence of green arrow and that of a thief. Mode is also bullish, and this is a very good setup that I tend to like. So it does show that momentum again is building up, and once it has successfully breached its 52 weeks high level, if the stock continues to show strength, that is where you should expect momentum to continue to build up for this particular counter. Alright, so another counter, NRG Energy, that is looking pretty positive based on this technical setup, as can be seen from the Traders GPS platform. So this platform provides an easy solution for most people to actually be screening for the right stock, especially if you are interested in finding out more about what are some of these trending stocks in the utility sector for you to be considering. This is one area whereby you can be considering. Okay, thank you very much for watching this video. I hope that you have gained some insights. I will see you guys in the next video.